Once you can accept failure, you can have fun and success. Rickey Henderson. And what we are talking about is being able to learn by doing. And when you do things right, you reward yourself and you're happy. And when you do things wrong or when the market just goes against you, you learn and you get better. You accept that small defeat because you have set primarily your loss limits and you get out. We have a great teaching for you today on complexity theory. We very much want you to take that, how we use complexity theory in investing and trading. And that is in the training section of your daily email that comes out every day with the daily review. That is just for the people that subscribe. How do you subscribe? Go to chartingwealth.com for free. Sign up. Let's jump into these charts. Big down day. Whoa, like graveyard kind of down. 4.5% for the S&P 500. 5+% for the Nasdaq 100. Bonds are up. Gold is up just barely. It was up much better during the day. End of the day, not up much. But let's jump first into the S&P 500. How's that dollar cost averaging looking now? Not so good. I'm glad that's not me. So as we look at the steep drop-off, what do we see happening? Well, we see the opportunity for a huge weekly vertical crossover going down big time as fear of the coronavirus. You know that virus listed on the back of your Lysol bottle that nobody heard of until we heard of it. 2,500 deaths worldwide. I think 5,000 die a week in the U.S. from the flu. But again, we will leave that as it may. It is roiling the markets, right or wrong. Things are crazy and probably going to get crazier. So we're waiting to see how things end on Friday. I think we can tell how that's going to end, and we'll be looking for a jumping in point using all our charts all the time, but we can see price percent oscillator stroking down, derivative oscillator moving down. And you know what's interesting about the derivative oscillators? You guys know from studying it, particularly those who took our training yesterday, because we explained what the derivative oscillator and the price percent oscillator were. Derivative oscillator is a leading indicator. Price percent oscillator, a lagging indicator. Well, the leading indicator showed us some signs of going negative, and we saw that actually back on the 14th. Actually saw things peak out in the market all the way back to the 17th of January. And then this huge big down week as the derivative oscillator really strokes over going down. We go from the weekly to the 2-day, and of course we can see the Monday, Tuesday, and the Wednesday, Thursday price percent oscillator really hammering down, the Heikin Ashi candlesticks and the derivative oscillator going down. Also, we go to that 4-hour chart, look at it, just red. Down in the morning, further down in the afternoon, just price percent oscillator moving. Now look at the derivative oscillator losing some of that downward momentum. So again, we'll watch, see how the market plays off on Friday, and let these charts lead us in what to do. Let's go to the Qs, the Nasdaq 100. What do we see there? It also crossed over going down big time. It just really developed that real strong crossover over the course of the day on Thursday. Big red down candle, stronger wick on the bottom, derivative oscillator just now this week going negative. So continue to keep an eye on things. Go to the 2-day chart. 2 big strong 2-day candles, 4 days of down movement. Price percent oscillator heading down quite strongly. Go to the 4-hour chart. And again, one bump up there. Well, slow down in the go down. That was on Wednesday morning. But again, down in the morning, further down in the afternoon. We'll see if there's any type of recovery on Friday or if things just continue to plummet. What about 20-year bonds continuing to move up over 1% for the day? Big green up candle. Price is well above the weekly trend line, and we just see things moving up, derivative oscillator heading up. Go to that 2-day chart, and we'll try to see if we can redraw a better 2-day trend line. I'd love to be able to connect. Nope, just can't do it. So we'll connect 2 candles, can't connect 3 very well at this time. We'll go ahead and do that. Price well above the 2-day. Price percent oscillator going up. Derivative oscillator heading up. 4-hour chart up in the morning. A little bit of a pullback in the afternoon. Still up quite nicely. And again, bumping up to a higher high in the morning. So we'll continue to watch, keep our eye on things. Derivative oscillator losing momentum, but that price percent oscillator still heading up. Go to our last chart. Oh, and of course, by the way, that is still looking quite beautiful as far as how things are moving up. Our trigger on this latest was, of course, that 4-hour chart crossing over, going up. So nice to see things continuing to go up on bonds. Lastly, we go to gold. What is gold doing? Well, we saw, let's start with the big chart, then I'll tell you about that 4-hour. Nice big green up candle for the week. Price percent oscillator heading up. Derivative oscillator still losing a little bit of momentum. Still green, of course. And we see the 2-day chart had a bit of a pullback there. Had things really banging up on the 25th. That was Monday and Tuesday of this week. And then this latest Wednesday, Thursday, still a red open, well, still an open box candle. That red means a slowdown in the up move. Long wick on top, small candle itself. Price percent oscillator still going up. Derivative oscillator still heading up. But again, we see some weakening in gold there. And that's when we go to that 4-hour chart and we can see where things peaked on the morning of Monday the 24th. Then down for the rest of the day on Monday, well, moving over, and then down Tuesday, Wednesday morning. Up Wednesday afternoon, Thursday morning, a little bit of a pullback at the end of the day, so only up 0.02%. See that price percent oscillator moving away from the red signal line, derivative oscillator gaining downward momentum. Really a sideways slide going on right now. Continue to keep your eye, if you're in gold, particularly on that 2-day and the weekly charts. That's where we are. We're going to be paying particular attention on Friday toward the close if we have a jumping in point for jumping into some of these down moves on the S&P and or the Qs, the Nasdaq 100. And we'll keep our eye on if we're going to continue in our practice trade on bonds and gold. Folks, that's where we are as we end the day on Thursday, going to the last day of the week. Don't forget to close the markets on Friday. That's when we'll provide you with our weekly review and forecast. Hope that your practice trades are going well. Don't panic with all this stuff going on. Learn from it, use it, be smart. And again, practice, trade it. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.